Okay. So good evening, everyone. So welcome back to the Clarity for Sure platform. So today we are with the another report in the month of January. This is the third report to the series that it is going on the YouTube, right? So the report name is a report on trend and progress of banking in India, right? So what about if you will see something related to the trending and progress of banking in India, and the report has been given by. So it is very much clear that the who will give the report for this kind of a thing, right? Where you are giving some trend and progress of banking in India. Obviously, it is RBI, Reserve Bank of India, will give that, right? So for the year 2024 and 2025, we will have the things to understand, right? So if you like the video, please subscribe the channel and also share it, right? Because we are taking a series on the basis of month wise. Now, this is again a January report. So RBI has given a report in the trend and progress of banking in India 2024 and 2025. So here is the shortcut that I have given, the notes that I have prepared, that is bright fintech. Through this, the terminologies will be very much clear, that because this is a very big document, right? So if you will see that odd, I guess 365 or 360 pages document it is. So there is a shortcut that I have given. Through this shortcut, you will understand what are the major points you need to understand in this document. Is it clear till here? So this document is very much important because it is something related to the banking in India. So RBI and SEBI and other banking exams, even if you are getting the GA part, this report is very much important, right? So let's start the class now. First, the report that I have told you, the trend of the banking things, the shortcut that you should remember is the bright fintech that I already told you. These are the broad areas that we will be studying in the report. Why? Because this shortcut will help you to create an image. Obviously, why in every report you are saying I'm giving some kind of a mnemonic, so that you should remember what kind of a things that we have studied in that report. Because once you will compile the report month wise, it will be around 40-50 reports, and it will be very much difficult at the examination hall to remember the report, right? So you should always remember with some kind of a mnemonic, right? So I have given a mnemonic. If you like it, then keep it. If after my class you want to have some better mnemonic, you have an idea, you can write it down in your notes and remember that mnemonic. But this kind of a learning will help you to qualify this cramming kind of a paper, right? So let's start now. So this what the focus area of this report is, first is the B. Obviously, because RBI will talk about in the bright fintech, first they will talk about the banking health. The first focus area, the broad area that you need to have is banking health. Second is regulatory reforms. Third is inclusion. Fourth is global economy. H is high fraud risk. Okay. So in the meaning of bright, BRIGH, till here it is clear. Now the T means that they are giving in terms of technology also some trend and progress in the banking sector. F, now the fintech. Fintech means for F stands for financial stability. I stand for investment regulation, and for NBFC growth. T for trust and consumer protection. Okay, let's see this. Right. E stands for environmental risk also, and C cooperative banks. This trend has been given something, and also for the household deposit. Is it clear? So this abbreviation is clear. What kind of a key headings you will be looking in this report, because this is a very big report. But if you will summarize in some kind of a mnemonic, you should understand, okay, these were the points I have to, these were the core findings where I have to see this report on the basis of banking health, regulatory reforms, inclusion, global economy, high fraud risk, technology, financial stability, investment regulation, NBFC growth, trust, consumer protection, environmental risk, cooperative banks, and household deposit. Is it clear? Bright fintech will be remembering. You all should remember this. Now we will talk about what does this report talks about. Okay? So some key headings that I will be telling you. RBI report is the name of this report is Trend and Progress of Banking in 2024 and 2025. Right? So what about the report? About the report, if I will talk about, this report has been published annually. Important, all the three reports which I have talked about is publishing annually. ठीक है? By whom? Obviously RBI, Reserve Bank of India, submitted to the central bank under section 36 subsection 2 of the Banking Regulation Act of 1949. ठीक है? Now it covers what? It covers developments in what kind of a thing? First, banking sector performance, financial stability, regulation and supervision, NBFC and cooperative banks, digital payments, financial inclusion, and emerging risk, that is technology and climate. So it is covering this part of kind of a thing. So this report is published annually by the Reserve Bank of India, submitted to the central bank under the section 36 subsection 2 of the Banking Regulation Act 1949, covers that what kind of a developments. This is this. So you should remember this key things, that what this report is talking about. So I hope it is clear. So you should understand this report is being submitted to whom? Obviously RBI will submit to central bank under what kind of a section? 36 subsection 2 of the Banking Regulation Act 1949. So the coverage period, if you will look about, it is up to 31st March 2025. So things are very much clear to everyone. Till here it is clear what is this report is about and what you have to under which, because an IBPS questions can be framed. The RBI report related to the trend and progress of banking in India 2024-2025 is published annually under the section 36(2), subsection 2 of the Banking Regulation Act 1949. What are the area that they covers for the development is this. Okay? So you should understand it. Now with the bright fintech, the key things that you have to look in the report, we will study each one of it. So first heading is about the report. I hope it is clear. Now the first thing under the bright and fintech we will study, that is first is overall health of Indian banking sector. It will talk about, this report will talk about overall health of Indian banking sector. So what does this overall health of Indian banking sector tells about? First is the asset quality. What is the asset quality of the banking sector? First, how, which, with what tools we will understand the asset quality, that is gross non-performing asset, that is gross, what are the things which are non-performing asset ratio. So if you join my RBI Grade B mentorship program, where I will be teaching you the concept of the monetary policy and the banking reforms, I will be teaching you what is the meaning of GNPA over here in very much detail. For now, try to understand this gross non-performing asset GNPA ratio is the gross non-performing asset GNPA ratio measures what? A bank's asset quality by comparing top defaulted loans to the total advances. Is it clear? So what are the assets the bank is having, right? And with comparing it with the top defaulted loans to total advances. Right now, it is very much easy to understand what is the meaning of this bank asset quality by comparing total defaulted loans to the total advances. Just try to remember this is the meaning of GNPA ratio. Is it clear? Is it clear? So the data you should understand, and if you want to have a better quality, what is the non-performing asset means, why the banks is having asset quality, what is the meaning of banks asset quality, why we are comparing it with the total defaulted loans to the total advances to get the ratio of gross performing asset, non-performing asset. So then you can join the RBI Grade B mentorship program. Okay? Now the data you should remember, that is 2.2% in March 2025 and 2.1% in September 2025. So what is the ratio in percentage, right? If you will talk about a GNP ratio in percentage was 2.2% in March 2025 and 2.1% in September 2025. So it is multi-decadal low. It is something, if you will think about from March to September, it is decadal low. The reason for the GNP ratio to decline is better credit risk management. Obviously this topic is there in your syllabus, credit risk management also. So the banks is having a greater credit risk management nowadays. Second, they have strengthened the supervision by RBI. So RBI has, if the supervisory department of the RBI is doing a great work, then what does it leads to? It leads to the decrease in GNPA ratio, right, of the asset quality. So that means RBI is supervising the bank with a tight kind of a things. Okay. Third reasons that you can put from here is improved recovery mechanism, that is IBC, etc. Okay. So I hope till here it is clear to everyone. Now try to understand what is the meaning of capital strength. Second, in this only, the overall health of Indian banking sector, that you can recall it by B in bright fintech. B means banking reforms that we will talk about. First was asset quality. Second is capital strength. So asset quality is being measured by gross non-performing asset ratio, and capital strength, RBI is giving the terms as capital to risk weighted asset ratio, that is CRAR. Okay, CRAR, and it is very much important for the bank to know. Why? Because those who are PO in any of the bank, they understand what is the meaning of capital to risk weighted asset ratio, CRAR, very easily, right? That is the capital strength. And for the more detail, you should join our Grade B program. Okay, here I will be clearing you the capital. Try to understand the capital to risk weighted asset ratio, CRAR, or capital adequacy ratio, that is CAR, measures what? A bank financial strength. बैंक की क्या measure करती है? Financial strength by comparing its whatever the capital bank is having to its risk weighted assets. What are the assets they are having in the form of risk weight? ठीक है? It ensures banks can absorb losses, protect if the suppose. Try to understand. Obviously, because it is also a ratio. Of what kind of a ratio? Bank's financial strength by comparing its capital to its risk weighted asset. Okay? If you will look into it, means if the bank has having good financial strength by comparing its capital to of its risk as weighted assets, means bank can, what can they do? They can absorb the losses if they are having, protect depositors also from it, and maintain stability, right? Obviously these points are very much clear to everyone. Now try to understand. RBI typically requires a minimum 9% CRAR. Kitna? Minimum criteria you should remember 9% CRAR, that is higher than the Basel 3. This Basel 3 I will be talking about in the monetary policy. Don't worry for it if you are not understanding right it now, because I have to complete every report. So I could not take a static class right now. But try to understand कि कुछ Basel 3 8% जो RBI की criteria है, उससे उसको CRAR को minimum 9% रखना है. So it is higher than the Basel 3 norms. ठीक है, that is 8%. ठीक है, based on credit, market and operational risk. Three types of risk we are having. One is credit risk, market risk and operational risk. ठीक है, so basis on that, the CRAR, the RBI should have minimum 9%. This data you should remember. ठीक है, so if you will see what this they have given. So they have given the SCB, that is Scheduled Commercial Bank, CRAR. ठीक है, it should be 17.4%. The implication is strong capital buffers, maybe the scheduled commercial bank, and the classification of scheduled commercial bank and non-scheduled commercial bank I will be teaching in the classification of bank chapter. Don't worry for that, right? Try to understand. This data has been given for what? Scheduled commercial bank CRAR, that is 17.4%, and the implication for it is they have given strong capital buffers, higher shock absorbing capacity. Okay, so this implication you can put in your descriptive answer writing, because this report can be also used for objective as well as descriptive. Okay, now the what is the profitability and growth? This report is showing the indicator and the value. Balance sheet growth is 11.2%. Net profit by banks is rupees 4 lakh crore. Balance profitability and growth, balance sheet of the growth 11.2% value, net profit of banks 4 lakh crore. Is it clear to everyone? Is it clear to everyone? Now try to understand. The Indian banks are profitable, stable and expanding lending. Indian banks are very much profitable. They are also stable and expanding in lending. Okay? Why? Because now the things are working more, because if the GNPA ratio is declining from March to September, means the asset quality of banking sector is been increased. Even the capital strengthening, it is increasing. The capital strength is increasing. The CRAR is increasing. The minimum they How much RBI should maintain? That is 9%. Bank should maintain as per RBI report 9%. Basel 3 कितना होना चाहिए? 8%. You should remember the profitability and growth is showing 11.2%. Net profit of banks is rupees 4 lakh crore. ठीक है? So the reason you can put for your descriptive answer writing, because this question, sorry, this report, not question, can be used for the descriptive writing answer if this some questions comes from the classification of bank. Okay, so you can use the data from this report. Okay, now the third is banking frauds. Banking frauds, if you will see, banking frauds means the total fraud amount. The total fraud amount is 34,771 crore in the year 2024 to 2024. If you will see the number, although the numbers of fraud declined, very important point. If you will see, if you will talk about the banking frauds key insight, then you will think that okay, it is around 34,771 crore in the year 2024 to 2025. Why? Because the number of frauds declined, the amount increased. The amount increased. Type of frauds most frequent किसमें होता है? मेरे साथ खुद ही हुआ है. Yes, I will tell you a story after the class. That is credit card frauds usually, and internet banking frauds. Is it clear? So share 66.8% of total cases. So that is 66.8% of total fraud cases that we are having. So largest value fraud is loan advances related fraud. Share is 30. Out of this, the largest value fraud is in the form of loans. Whenever we are taking loans, इसमें सबसे ज़्यादा fraud होता है. Advances related to the fraud. ठीक है? Now the share is 33.1% of the total fraud amount. The total fraud amount कितना है? 34,771. Is it clear? So you should remember the data. It is completely a data type. So bank group wise fraud, if bank type and share. If you will see private bank sector, cases are 59.3% cases. Public bank sectors में देखो. So you are seeing who is doing a more good kind of a service, HDFC or PNB. So you will think from here. What is the, because the classification of banks, if you don't know, just attend my classes, then you will understand. Okay. Now, so public sector banks 70.7% fraud amount, and in this private sector bank it is 59.3%. Okay, cases. So it obviously SDFC or ICICI is doing a greater job. There are three banks which are, if they will fail, Indian economy will fail. Name them. It is up to you. Meaning private bank, more incidents, okay, larger financial impact, that is public bank. Financial impact किस पे ज़्यादा होता है? That is public bank. You should understand it. The fourth key finding that you should have a clarity with, that is NBFC sector performance. You should have a clarity with the NBFC sector performance. That is, first is NBFC plays a major role in financing, right? Obviously, it is very much easy. Can NBFC takes a demand deposit? It is a question up to you, because once I will be teaching the classification of bank, I will be dealing this kind of a things. Okay? So can NBFC take a demand deposit? A questions to you, right? Now try to understand. NBFC also play a major role in financing. That is retail borrowers, MSMEs, small businesses, and earned reserve sectors they give. So we have seen in the year 2024-2025. NBFC credit growth 19.4%. NBFC credit share 25% of the total bank credit. Whatever the total bank in the form of credit bank is circulating, right? Out of which 25% have the percentage value is from NBFC. It is very much important to understand. The capital strength is CRAR. Okay, I just made you clear what is CRAR of NBFC is 25.9%. and indicates what? Strong capital buffers. They having a strong capital buffer. How the NBFC, even if they are not taking a demand deposit, how they are earning and having this kind of a strong capital buffers, right? If you want to have a greater detail, join our RBI Grade B Mentorship program for the classification of banking, in which I will be teaching you how NBFC earns money if they are not taking a demand deposit. Okay, right? So fifth question is cooperative bank. Cooperative bank, in the form of cooperation, this bank has been formed. So first is, there are different criteria, but this report I have taken only two examples related to urban cooperative and rural cooperative, and something which is development banks we have talked about. Okay, so urban cooperative bank, that is UCB, improvement in asset quality, profitability and business growth, means the GNPA ratio has been declined, तभी ये चीज improve होगा. ठीक है. Now the rural cooperative bank, some institutions remain weak. Still in rural cooperative bank, some institution remains weak. Example, state cooperative agriculture and rural. Right. So this, I hope with the fifth, that is the key findings. The first two UCB and this rural cooperative bank, okay, it is clear. Now we will talk about the development bank. Development banks has the GNPA above 38%. That is the meaning they are very much in the failure, because if the GNPA will be higher, right, the non-performing asset of that bank, gross non-performing asset have the bank, the bank will be under the severe financial state, right? So development banks are indicate severe financial state. Is it clear? Is it clear? So the first four findings that I have told you related to about the report. Second is overall plight of the Indian banking sector. Third is banking frauds, and fourth is NBFC sector performance. I hope it is clear. And fifth is cooperative banks. Still here it is clear to everyone, right? Is it clear to everyone? Please respond. So let's start now. The sixth point is financial inclusion. Financial inclusion is the financial inclusion index. The financial inclusion, the concept of financial inclusion, the next key findings is financial inclusion. Why? Because financial inclusion talks about, because if whatever the banking nationalization concept and the privatization you have seen in various committee, Narsimhan committee, you will understand, RN Malhotra committee and everything. So you will understand from there the concept only for that. Even IBC code, why it has been formed, NCLT was why it was there. The all concept roam around the financial inclusion. The all thing that the major changes in your society was due to the financial inclusion. Just I am giving you a glimpse. Once, if you want to have a more clarity, join our RBI Grade B Mentorship program, then you will understand. So the financial inclusion index, the RBI financial inclusion index, that is FI index, it is very much important. For March 2025 rose to 67 up to from 64.5. If the financial inclusion means it is financial literacy, the meaning of inclusion is that we are educating in the terms of financial system more people we are educating. Gaon tak we are moving, till every district we are moving. So it has, the data has been rose up. That is a very good sign. Okay? Driven by improvements in usage and quality, the index ranges from 0 to 100. 0 means complete exclusion, 100 means full inclusion. Okay? If in a particular state there is a 100 marks it has been given, means there in that state there is a complete full inclusion. Okay? And comprises three main parameter, that is 45% weight, 35% access and quality 20%. So if you will talk about in the year and the value, 2017 the value was 43.4, 2025 the value is 67, you should remember. So shows significant improve in financial inclusion. Nowadays there is a significant growth in the financial inclusion. So you can put this data where you will have a question related to the financial inclusion. The key initiative that has been taken is a national strategy for financial inclusion, digital payment expansion, financial literacy programs, business correspondent BC model. These were this point you can keep. What are the initiatives that they have taken for the financial inclusion? So you can put this 4 point in your descriptive answer writing, right? What are the steps? You can put this point. Is it clear? Is it clear? So I hope the another finding, that is financial inclusion, it is clear to everyone. Now we will under this financial inclusion, because if the inclusion want to be have a greater expansion, then the complaint related to the bank, whether the bank inclusion is there should be in a top level kind of a thing. So there is a ombudsman kind of a thing in a RBI, that is under RBI integrated ombudsman scheme, that is RBIOS 2021. And in this department only this year various vacancies will be coming. Why? Because it has a lot of things it needs to be done in ombudsman. ठीक है, इसी वजह से RBI में this year the vacancy will be rising up. ठीक है. Now again the feature is, first the ombudsman is cost free grievances redressal. It is not at a cost. You have to pay something for telling the in your district the banking, the financial inclusion is not working properly. It is cost free grievances redressal. right? Whatever the grievances of the households are there, it will be free of cost. Okay. Faster complaint resolution. If the complaint has been registered in the ombudsman scheme, that is RBIUS, then it will have a faster complaint resolution. New update. What is the update you can take over here from 1 November 2025? Coverage expanded to include state cooperative bank. Now the RBI ombudsman thing, ombudsman जो scheme है, it will also include, very important, state cooperative bank and central cooperative bank. There are other types of cooperative banks in which all these states and central cooperative banks will be also getting included in ombudsman scheme. So you should be very much. Previously these were under NABARD. समझ में आया? So you should understand the sixth point very well, that is financial inclusion. So in the financial inclusion only, RBI ombudsman will come. The seventh point is digital payment expansion. The digital payment expansion, India's digital ecosystem is rapidly expanding. If you will think about India's जो digital ecosystem है ना, वो तो तुमको दिख ही रहा है, rapidly evolving. UPI आया, UPI Lite आया, UPI 1 2 3 Pay आया, till we have cryptocurrency, and everything is being very digitally, it is expanding, right? So it is the key static is 514 district fully digitally enabled. So the key static that you can put from here is, out of which, out of in India, how many districts we are having? 514 districts are fully digitally enabled right now. Meaning, what is the meaning? Every eligible person has the access at least one digital payment system. Whatever the different digital payment system we are having, right? One people at least having the eligibility over it, okay, to use it. So it is very much important. So what does it impact to? If there is an expansion in digital payment expansion, so what does it impact to? It impact to the internationalization of payment system. The payment system of India, if it is to the every household in the country, then what does it lead to? Now from household we can reach to other countries also. So it leads to the internationalization of payment system. So digital payment expansion also has an impact in internationalization of payment system, and this is a very beautiful point which you can put if the question can be asked related to digital payment in your answer writing. Okay. So India is exporting its payment infrastructure, right? That is a key initiatives, means China, Bangladesh, China, I won't say Bangladesh, the neighboring country Pakistan will be taking the initiatives of digital payment expansion of India, because India is now showing a greater extent and fully digitally enabled thing kind of to every user. ठीक है, समझ में आया? So the key initiatives they are taking: cross border UPI payment, it was in the news, UPI interlinking with foreign payment system, export on UPI. Now the export on UPI is available, and RuPay technology. Is it clear? Is it clear? The seventh point should be very much clear to everyone. The seven key findings should be very much clear to everyone, right? Now, the eighth finding is technology in banking, and it is very much important, because if you will see last 1 year, I have personally seen most of the vacancies are coming for the AI ML in banking sector, whether it's Bank of Baroda, whether it's Bank of Maharashtra, any bank, right? They are coming with the seats of EC and IT engineers in the term of artificial intelligence and machine learning. So you are saying that the report is also showing, and जितना जल्दी हो सकता है generalist में job ले लो, because the major technologies transforming finance, right, is related to AI, artificial intelligence and machine learning. So that is technology, and banking is also very much helping the banking trends to change as per the report of given by RBI. Okay. The application, it is, and obviously the digital public infrastructure, DPI, it is very much important. So application is credit risk assessment, fraud detection is easier now, assessment of credit risk, whether the person is liable with the things, and they are making a fraud kind of a paper for getting a credit, right? So this is getting easy now. Customers service automations is there by their own, within the usage of WhatsApp chat or anything. They can just, अगर कोई problem है, like transaction आपने नहीं किया and you want to block card, so you don't need to call every time phone banker. Just WhatsApp message से भी your card will be, or your account will be seized for 24 hours. So this is customer service automation is there also, right? So faster loan approvals is there. Obviously you can check now, if there is a faster loan approvals, within 24 hours your loan can be approved, and within 2 hours or 3 hours it can be settled in your bank. Okay, right? Bank account. So it is very much important. So why does it? Because in the technology in banking they are increasing. Even if, yeah, if they are increasing only, then the digital payment expansion is also there, na? Right? So try to understand the technology risks. RBI warns about algorithm bias, data privacy risks, model risk, and systematically technological disruptions. Emphasis on responsible use of AI. So AI, if there is a use of AI, obviously there will be a disadvantage of AI also. So if there is an algorithmic bias, if someone has programmed for RBI on the bias basis, right? So it will be only answering the thing which is based on his viewpoint, right? So AI somehow makes the job easy, but the viewpoint is very much important in AI, the kind of a program that you have. So it is very much, the technological risk is also there. RBI wants about it to the bank. Okay. Ninth is, and very much because we are not doing the PhD over in the report, so just jitna crux hai, we will understand it. Now the 9th point is climate risk and financial stability. What do you understand by the climate risk and the financial stability? Climate risk means the climate change is an emerging systematic risk, because if you will see, the change in climate is also will also lead to a financial stability or instability. ठीक है समझ में आया? Try to understand types of climate risk is physical risk, that is flood, cyclones, heat waves. Transition risk is carbon taxes. This is transition risk related to the conflict between two countries. Carbon taxes, environmental regulations, energy transitions, right? So what does the RBI have taken the initiatives? Climate risk disclosure framework, that is Reserve Bank Climate Risk Information System, RBCRIS, is formed. Obviously, if it is something related to the climate, it should be for sustainable finances initiative. Okay. So climate finance described as national imperative. Climate finance is described as national imperative, and this word is very much important for your understanding, that is national imperative. Okay. Now the 10th point, the regulatory philosophy of RBI. What was the philosophy that has the RBI has given after understanding all the climate, banking, financial inclusion, everything? Okay. So it is, RBI is a regulatory framework, follows 5 principles. What principles they follow? You should remember: proportionality, consultation, okay, evidence driven regulation, principle based regulations, and agility. Okay, these are the things that they have given. So what is the master direction consolidations? RBI simplifies a regulatory framework. 9,000 plus circulars consolidated. How many circulars consolidated? 9,000 plus circulars. Why? Because if you will understand what is the difference between notification and circulars, can anyone tell me what is the difference between notification and circulars? देखो, notification जो होता है, एक शॉर्ट फॉर्म में समझाता हूँ. नोटिफिकेशन इज समथिंग लाइक अ, इट इज अ समथिंग लाइक एन एक्ट. लाइक एक्ट क्या होता है? अगर कोई एक्ट बन गया तो इट इज इन्फोर्स्ड टू ऑल सिटीजन्स ऑफ इंडिया, राइट? एक्ट इज इन्फोर्स्ड टू ऑल सिटीजन्स ऑफ इंडिया. वेयर सर्कुलर्स क्या होता है? इट विल ओनली इन्फोर्स टू दी category we are working. Suppose if RBI is publishing a circular, means it is public, it is, this circular is meant for, yeah, scheduled commercial bank, yeah, non-scheduled commercial. They will specify that. Means only the group specific cohort word आपको मैंने unemployment में पढ़ाया था, cohort for a specific group the circulars will be published. So if RBI is publishing, obviously they will publish for banks. So whether they are publishing for scheduled commercial or anything, right? So cohort is the word that is can be used in terms if you are understanding the circulars. राइट? तो आरबीआई अगर किसके लिए पब्लिश, आरबीआई सुपरवाइज ही किसको करता है? बैंकिंग सर्विस को. सो ऑब्वियसली दे विल हैव अ सर्कुलर. इसलिए तुम देखना इन एनी सर्कुलर इट हैज बीन रिटन दिस सर्कुलर इज फॉर शेड्यूल्ड कमर्शियल बैंक. इट इज नॉट लाइक एन एक्ट दैट द सिटीजंस वी आल्सो विल फॉलो दैट थिंग. सर्कुलर्स वी विल फॉलो, हाँ, नोटिफिकेशन वी विल फॉलो बिकॉज इट इज समथिंग लाइक अ पैरेंट. लाइक इफ एक्ट इज अ सेट, देन नोटिफिकेशन इट्स इट्स सबसेट. सो वी अंडरस्टैंड. इसीलिए तुम नोटिफिकेशन में देखना अंडर बैंकिंग रेगुलेशन एक्ट ऑफ 1949 and RBI Act of 1934, this notification has been published, but nothing has been written in circulars, right? It is only eligible for the particular cohort. ठीक है, समझ में आ गया? Is it clear? So RBI क्या simplify किया है? Regulatory framework 9,000 plus circulars को consolidated, converted into 2,000. 9,000 को किसमें convert कर दिया? 2,445 master directions. Covers 11 types of regulated entities. So what is the objective over here? It reduce compliance burden. What does it reduce to? Compliance. Obviously, if there will be more circulars, there will be more compliance, or the compliance is getting reduced. Second is improve the clarity, right? Because it covers 11 types of regulated entities. Third point is it enhances the ease of doing business, obviously. Okay, so you can use this point of the regulatory philosophy of RBI in your descriptive answer writing. Now the 11th concept is very much important, because it is something new that you haven't heard, maybe some new student. That is expected credit loss, that is ECL framework. RBI is also giving the ECL framework. What does it mean to? RBI will shift from incurred loss model, how much loss has been incurred, to the expected credit loss model. Okay, how much credit loss can be expected. Now we are not calculating how much loss we have incurred. We are calculating how much loss we have been we will be expecting. And here we means RBI, right? I am talking about RBI because RBI is giving the report. Okay, now try to understand the purpose behind it. Early state recognition. If you can expect, सपोज करो क्रेडिट लॉस मॉडल के थ्रू आप एक्सपेक्ट कर लोगे, तो आप अर्ली स्ट्रेस, फाइनेंशियल स्ट्रेस को रिकॉग्नाइज कर लोगे. तो द फर्स्ट पॉइंट इज वेरी मच इजी टू अंडरस्टैंड, राइट? ठीक है. सेकेंड पॉइंट इज इट इज forward looking provisions. Obviously it will be having a better forward looking provisions. Applicability, it is for how who are applicable for this ECL framework. All the scheduled commercial bank except small finance bank. Okay, and even if you are not understanding what is small finance bank and payment bank and regional rural bank, join my classification of bank, kabhi doubt nahi hoga what is. So accepted small finance bank, all type of scheduled commercial banks having the ECL framework, okay, which means that expected credit loss model, expected, not incurred. Okay, all are again on AIFI. Okay, all Indian financial institution. AIFI पे भी हो रहा है, that is 5 AIFI under RBI is working. NABARD, NHB, ECGC and NAFED and एक और है. Is it clear? You should understand the 5 AIFI is there in India. So it is applicable. ECL framework is applicable on them also. Okay, IFSC is not. IFSC, how can you say it is not an AIFI? IFSC comes under the Department of Finance. I have made you clear what is IFSC is doing. It is coming under the Department of Ministry of Finance department. SIDBI is the 5 AIFI SIDBI. ठीक है, AIFI अलग चीज है, RBI के अंदर आता है, right? Who is regulating AIFI? RBI. Main supervisor वो है. Is it clear? So NABARD, SIDBI, and NHB, ECGC and NAFED. They are AFI. How can you say that Sagar IFSC is an AFI? IFSC comes under which department? Ministry of Finance के department के अंदर आता है, SEBI and IFSC है. Think well. Finance पढ़ाने के बाद भी ये हाल है. Then sorry, I must say sorry. Implementation is effective date 1st April 2027. How, from which date it will be getting affected? Remember the date because data can be asked, and tenure also. Transition period is for 5 years. Okay, so April 1 2027 it can be done. So the 12th point is related to RBI has given in this report of the analysis and trend in banking system. It is related to the microfinance regulation changes. Microfinance, right? Small finance वगैरह आप समझ सकते हो microfinance. So effectively the date is important. Effectively February 2025, on which date? February 25, 2025, the RBI reduced what? Weight on consumer credit microfinance loans to 100% from 125%, reversing 2023, tightening to boost credit flow. Other qualifying microfinance loans may carry a 75% risk weight, whereas regional rural bank and local area bank now apply for 100% risk weight to all microfinance loans. So the category of loans are very much different. So if the microfinance loans you are taking small loans, then these are the data you should remember it. Okay, so what is the key regulator changes? That it is effective from February 25, 2025. Okay, consumer credit finances loans means risk weight lowered from 125% to 100%. The key points from where you can answer. Other qualifying microfinance loans 75% risk weight provided they meet specific criteria under the regulatory retail portfolio. So if you will understand the regulatory retail portfolio, you will understand what are the other qualifying microfinance they will have. And this is the third point is a regional rural bank and local area bank. All microfinance loans now attract 100% risk weight. Now what is happening? All the microfinance loans are now attracting 100% risk weight. Okay? And it is very much risk weight you will understand in the course related to the banking terminologies. Okay? Now the scope. These changes apply to both new and outstanding loans. So if you will see, these kind of changes are applied to even the existing loans. They will be applicable, and it is very much important point, and also to the outstanding loans. Now try to understand what is this. The point has been given. NBFC MFI. Okay? Microfinance institution, that is NBFC. Asset diversification. What it is? Qualifying asset requirement reduced. What is the reason behind the qualifying asset requirement? It is getting reduced. Earlier for NBFC it was 75%. Now it is 60%. Okay? Now it is 60%. So it is effective from 6th June 2025. From which date it is getting effective? 6th June 2025. The purpose for having the NBFC and MFI is allow diversification into less vulnerable sectors. Why? Because if the qualifying asset requirement reduced, it will lead to the diversification, less vulnerability, and that is very good for the NBFC. Okay? That is very good for the banking system as well. So you can put this point because this data is very much important. Whatever I am teaching you, done, just make a note, and जैसे static complete होगा, again revise reports from the playlist of the NABARD, and from the playlist of the Clarity for Sure platform, and then you will have a more clarity. बस आपको उस समय data याद रखना है. I can understand some of the students may face problem. What is microfinance regulation? Once you will be completing the static course, then it is very much easy to mark the data. ठीक है? Is it clear? Now the 13 key highlight point is liquidity coverage ratio, that is LCR. Liquidity, you can understand what is the meaning of liquidity, how fast you can convert anything into cash, right? So it is coverage ratio, LCR changes. There is something, liquidity coverage ratio is also getting changes effective 1st April 2026. The RBI is revising liquidity coverage ratio, LCR norms to mandate an additional 2.5% runoff factor, which is what it has been given, 2.5% runoff factor on retail and small business deposit, and it is very good. Accessible via internet mobile banking, specifically targeting digital deposit risk. This brings total runoff for stable unstable digital deposits to 7.5% and 12.5%, while reducing runoff rates for non-financial corporate deposits to 40%. समझ में आया? Is it clear? So you should remember it. How much? It's stable and unstable digital deposits to 7.5% to 12.5%, while reducing runoff rates for non-financial corporate deposits to 40%. And the data you should remember, something you can read it and you can understand it. So what are the key changes? With this key changes are the points that I have made in the PDF. With this point, your everything will be getting cleared more for this LCR, that is liquidity coverage ratio. Okay? Effective date is, remember, 1st April 2026. Additional runoff factor is 2.5%. Runoff is applied to digital enabled depositor, those who are depositing in digitally, bringing stable online retail small business deposit to 7.5% and less stable to less stable businesses usko 12.5%. Run off rates by category: banks, financial institution 100%, non-financial corporate trust and partnership, that is 40%. You should understand the terms that has been given over here for the liquidity changes. Okay? Now the placed deposit. What are the placed deposits? Non-callable fixed deposit, okay, used as collateral, will now be treated as callable. So now it will not be treated as collateral. It will be called as callable document. Callable document. Can anyone tell me what is the meaning of callable document present in the class? Can anyone tell me what is the callable meaning? Callable का मतलब क्या होता है? Please be responsive. Don't have a spoon feeding. What is the meaning of callable? ठीक है, tell me. You can understand it. Anyone? It is AI driven marketing tools. It is something हाँ, it is something which is AI driven marketing solution. It is right. So you will have a thing, kind of a thing. So just remember it what I have told you. I am not telling you in very detail, but remember it because ऐसे भी बहुत data you have to remember. The impact is these changes aim to improve the banking systems LCR by roughly 6 percentage points by holding more high quality liquid assets, that is HQLA, specifically addressing what digital withdrawals risk. So this you should read it with a just a passage kind of a thing because it will be helping you to understand it clearly, right? Because this LCR, that is liquidity coverage ratio, right? So you should understand it more clearly. Okay, so I hope it is clear to everyone. Okay, तो देखो एक्चुअली में कोलेबल का मतलब होता है कि anything a bond that you have paid earlier than the maturity, any kind of a bond that you are paying earlier than the maturity date, that is the meaning of callable. So now because the financial inclusion the AI driven networks has been used, so that's why I have made you something which is for AI driven. So how can you pay the maturity, pay the bond before the maturity? Obviously through AI driven tools you are paying it earlierly. Likewise we are paying the EMI also earlierly na. Suppose you have taken something for a 6 months of EMI, can you pay EMI earlier? Yes, you can pay the EMI earlier also, right? So the impact they have created over here is these changes aim to improve the banking systems LCR by roughly 6 percentage points. Okay, so the term are very much clear to everyone. Now try to understand the thing. The runoff rates is banking issuers financial institution is 100%, non-financial corporates is 40%. So what is the government securities effectively April government for the government securities it is telling about? If it is effectively April 1st 2026, the RBI mandates that level 1 high quality liquid assets, that is HQLA, in the form of government securities, that is G6, okay, be valued at the current market value. At what market value? Current market value, adjusted for haircuts along with LAF and MSF, that is liquidity adjustment facility and marginal. MSF क्या होता है? Can anyone tell me? MSF, ये these are the tools of monetary policy. इसलिए मैं बोल रहा हूँ after monetary policy tools you will understand this thing. MSF क्या होता है? ठीक है? Marginal standing facility. Yes, you should understand this thing. So the data, just remember it. Even if you are not understanding for the government securities, because government securities is linked with LAF and MSF, so you should understand it clearly. Once you will have a clarity of monetary policy, then again if you will read this document, you will have a better understanding. Right now the key details of the regulatory changes that we are having for the regulatory changes, that is the haircut alignment, the sector, the government bonds, government securities, not bonds, government securities, central or state, whether it's a central government securities or a state government security, used for the liquidity coverage ratio, that is LCR, will now incur the same for 0.5 and 6% haircuts applied in repo emergency borrowing. ठीक है, repo emergency borrowing right now, if you're not understanding, don't worry, join my RBI Grade B. You will have a mentorship program, you will have a clarity for these points. Replacing what? Previous lower valuation. What does it replace to? It will replace the previous lower valuation. What is the scope? If there is a regulatory changes related to the government security, what is the scope? These rules apply to commercial banks, excluding what? Regional rural banks, important for your IBPS examination. Local area bank, and what kind of a bank? Payment banks. These will exclude this kind of a bank, that is regional rural, local area and payment banks. Okay? What is the purpose that they have given? To enhance risk sensitivity by ensuring HQLA valuation reflects market conditions during stress scenario. Okay? So you should use these points in your descriptive answer writing. Impact what they are having, while estimated to reduce HQLA by 2-3%, these changes combined with other framework adjustment aims for a net positive or neutral impact on overall bank liquidity. It will impact an overall bank liquidity. So the 14th point is related to the KYC regulation reforms. So based on RBI know your customer, that is KYC, second amendment direction 2025, issued on August 14, 2025. ठीक है. The RBI introduced a significant changes to strengthen KYC portals. KYC से related भी portals को they will strengthen now. They have given a things that in the report. ठीक है. And August 14, 2025 से हो रहा है. Improve inclusion and modernize authentication methods. What kind of a method they will use? Modernize authentication methods. So here are the key changes in details. First is fair processing rejection control. First point is fair processing and rejection control. Mandatory documentation you should be having for what? Regulated entities like RE, regulated entities you will understand, okay, in the classification of bank, that is including banks and NBFCs, must ensure that no KYC application, including those on onboarding or periodic updates, they should have the periodic updates of the KYC. It is rejected without application of mine. Is it clear? Is it clear? Try to understand the first point, mandatory documents. Second, recording reasons. The officer concerned must duly record the reasons for rejection before notifying the applicant. So they should also record the reason for the rejection of their KYC document and notify the applicants. Okay? This is the changes. Third, accessibility focus. These enhanced requirements specifically aim to protect customers. Obviously, this will help to protect customers, particularly persons with disabilities, that is PWDs, from arbitrary rejections. So from arbitrary rejections, they will just have a protect them. Okay. Now, second, third party due diligence. Transactions more than 50,000. If there is a transaction more than 50,000, what is happening? Okay. Threshold coverage. The scope of mandatory KYC verification is expanded to occasionally transaction equaling or exceeding 50,000, whether as a single transaction or multiple connected transaction. Second point is international transfer. KYC verification is now specifically mandatory for all international money transfer operations, even for individuals who are not existing account holders. Okay? Even for your international transfer, you should have the KYC coverage. Okay? KYC is mandatory for that. Now the third party reliance. Banks may rely on the third party due to diligence. It is very much important. Example, another regulated entity for these transactions, provided they can immediately obtain the documentation. Suppose if you have heard the word that is credit B. Credit B is a money lender. Okay? Money, it is a P2P kind of a money lender, person to person type, but they are collaborating with the main bank, like some of the microfinance NBFC, they are collaborating. So this is the meaning of third party reliance. They are not directly giving the money, they are collaborating many NBFCs, and by that they are giving. So for them, KYC doc is now mandatory. ठीक है? And पहले भी mandatory था, but अभी क्या है? Rely on third party due to diligence. So banks can also rely on them. ठीक है? समझ में आया? On the third party reliance. Is it clear? So I'm not making you very much clear, but try to understand. This is the things that we have talked about. जहाँ पे बस data याद रखना है. While I will be explaining the MCQ, it will be having a more clarity. ठीक है? Now, third point is Aadhaar based on authentication is required. Digital integration. The RBI has formally added Aadhaar based authentication to its KYC framework. Valid identification. It is now recognized as valid method to customer identification, similar to Aadhaar OTP or biometric based KYC. ठीक है? Fourth point, it is in the KYC regulation, inclusive virtual KYC, that is VCIP. It is very much new to everyone, but you should read it. That is inclusive terminology. I'm saying inclusive technology when using the video based customer identification process, that is VCIP. The liveliness check terminology must not exclude person with special needs. Those who are having with the special needs, the person should not be just excluded. Okay? It should be inclusive technology. Now it is using accessible VCIP. That is, the regulation demand that VCIP procedures remaining accessible, non-discriminatory, and accommodate the requirement of person with disabilities also. Is it clear? So they should have the person with disabilities also. Now 15th point. 15th point is that inoperative accounts and unclaimed deposit. Okay? Inoperative, the accounts which are not at operative measures, and unclaimed deposits. Unclaimed deposit, the deposit has not been claimed right now. Okay? So it is amendment issued that from June 12, 2025, okay, new provisions, that is KYC can be updated at any branch, video KYC allowed, business correspondents can facilitate KYC updates. Okay, till here it is very much clear. So I hope this page is also clear. Okay, now accelerated uh, payout schemes, that is uh, period 1 2025 to September 30 2026. Purpose, it is return unclaimed deposit to customer, banks receives incentives for faster payouts, right? So the I hope the 15th point is also very much clear to everyone. Now the 16th point is the regulation of bank investments in AIF. AIF, it is clear to everyone. Let's read it. 16th key highlight is regulation of bank investment in AIF. Now effective January 2026, the RBI investment in AIF direction 2025 restrict regulated entities REs, okay, exceeding exceeding a 10% individual and 20% total AIF scheme corpus investment. 100% provisions is mandatory if RE invest greater than 5% and the AIF invest in the RE debtor with 12 months, preventing indirect loan evergreening. Key aspects of the July 29, 2025 direction is: first is investment limits. The first point is individual uh, RE, that is no single RE regulator entity can invest more than 10% of any AIF schemes corpus. Okay, total RE aggregate investment by all RE in a single AIF scheme must not exceed 20% of the total corpus. So if you have covered the circulars of the previous year RBI, these points were mentioned in that. So just you need to data, right? Okay, these were the things they are talking about the regulatory entities, and you should understand it, right? So provisions rules downstream investments. If RE investments exceed 5% of the AIF corpus, all the AIF invest in a debtor company of the RE. The regulator entity must take 100% provisions on its proportionate investment capped at its direct exposure of the debtor company. Okay? Debtor definition very easy. Any entity the regulator entity has loaned to or invested within the previous 12 months. Exclusion is equity investments by AIF are excluding 5% of the provisions rules. Wherever you are seeing the data 20% of what, you should focus on that data. Okay? And it is very much important. Now, subordinate units, investment in subordinate units, AIF must be fully deducted from the RE's capital funds. Applicability and exemptions, these direction which replace earlier 2023-2024 circulars. I already told you because I have taught these things, 10%, 20% corpus and everything in the last year circulars. Just you read the data and you should understand, okay, these were the changing in trends in AIF, reinvestment and everything. So you will understand it. Apply from January 1, 2026 as on earlier voluntary adopted. Investments or committees made with the prior RBI approvals are exempt from the new caps. Is it clear? What is the purpose they have given for it? The purpose is that to prevent indirect exposures evergreening where AIFs are used to finance stressed borrowers of a lending institution. Okay, or for a lending institution. Capital deduction, if a regulator entity such as bank or NBFC invest in subordinate units of an AIF scheme including sponsor units or any priority distribution model, the RE must deduct the entire investment that is 100% of the amount from its capital fund. So this point is very much important for your understanding, that is the capital deduction. Now try to understand what do you understand by the 17th key finding that in the report. It is very much important, that is co-lending arrangement, that is CLA, co-lending arrangement, because I have taught this circulars in last class, I remember it. So just I am reading it and try to collect the data. Effectively January 1st 2026, the RBI co-lending arrangements direction 2025 expand the co-lending framework to all the loans, not just to the priority sector. Okay, for all the regulated entities. Key changes reduce from minimum role retention 10% from 20%. Okay, limit default from DLG is to 5% and mandate 50% day transfer of exposure. What was the key changes? Key 2025 CLA changes and regulatory details is Effective date is January 1st, 2026. Scope is expanded beyond priority sector lending PSL to include all types of record, whether it's unsecured and secured. I'm not making you clear what is secured loans and what is unsecured loans right now, because it will be very much big, this report. It is a big report. So you should read it and just read it the data. While I will be discussing the MCQ, everything will be cleared. So secured and unsecured loan में समझ लो, personal loan unsecured होता है, and home loan that you took is a secured loan. Between the RE. Minimum retention, each RE must retain a minimum of 10% of the individual loans in their books, reduced from the previous 20% rule. Default loss guarantee, that is DLG. Originating REs are allowed to provide DLG up to 5% of the outstanding loan to the partner of regulated entity. What is the transfer period? Loan exposure must be transferred between the partners within 15 calendars days of disbursement. Applicability, what is the applicability we are having? Applicability is applies to commercial banks excluding regional, rural banks, local area banks, all India financial institutions, and NBFC excluding housing finance banks company. Okay. Prohibited, if you will think about prohibited structure, so prohibited structure, it is these rules prevent regulatory arbitrage by enforcing strict risk sharing and prohibiting disguised originate to distribute model. What is the disclosure they have given? That is, partner must disclose details including DLG and weighted average interest rates in their financial statement. So I have given some key points, only this key point. इसीलिए ये document बहुत बड़ा था, right? Because पिछले साल की जितने भी circulars की master guidance थे, they have given this, they have seen the trend change in 2024, 2025, and सारे changes को they have made in one report. ठीक है? So this report is easy to understand those who are prepared for RBI Grade B last year, that is 2025 and 2024. Okay, so it will be very easy for them. Rest for the new, they will just read every data in once. ये अलग अलग मैंने पिछले साल सारे circulars को पढ़ाया था, gold lending, this everything. ठीक है? Now 18th point is related to the other key finding that we are having in this report is gold lending reforms. Effective April, from the date you should remember, the RBI has implemented new tiered LTV ceilings for gold loans. That is 85% up to rupees 2.5 lakh, 80% for कितना है 85% up to 2.5 lakh, 80% up to 2.5 से 5 lakh, and 75 above 5 lakh, aiming to boost liquidity. Obviously, if there is a gold lending reforms, what does that lead to? It will lead to aiming boost liquidity. Alongside gold metal loan GML reforms effectively from December 4, 2025, extended tenure to 270 days and explained eligibility to non-manufacturing jewelers. ठीक है? So what is the key gold lending reforms and guidelines 2025-2026 is? First is tiered LTV ceilings effective from April 1st, 2026 up to 2.5 lakh, that is 85% LTV, higher than the liquidity of small borrowers. 2.5 से 5 lakh पे कितना है? You should remember the data. 2.5 से 5 lakh पे कितना है? It is 80% of LTV. ठीक है? And above 5 lakh, it is 75%. Just इतना ही remember करना है. So gold metal loans, that is GML reforms effectively December 4 from 2025. So you should remember this thing. This is related to the 18th point related to the gold lending reforms. Now we are talking about, let's see how much big it is, right? Okay. So we will be talking about the tenure extension, that is GML replacement period. It is 270 days. You should remember. Expanded eligibility. Non-manufacturing jewelers can now access the scheme. General rules and compliance. Pledge limit, that is a restriction on quantity, 1 kg for ornaments, 50 kg for gold, and 10 kg for silver ornaments. You should remember. The documentation you should have verifiable ownership proof required. Valuation. LTV must be maintained throughout the loan tenure, covering both principal and interest. What is the scope? These regulations apply to banks, NBFCs, and cooperative banks with full compliance by April 2026. So this is the data that you have to understand. That is lending against gold and silver. New LTV ceilings is loan amount. इतना आपको ये याद रखना है. I have again and again I'm not repeating because already it's been 1 hour. This I will be completing everything in 25 minutes. Okay? Now try to understand. The 19th point is, it is showing nomination and clean settlement reforms. So 19th key findings is telling about the nomination and claim settlement reforms. The RBI has introduced what significant reforms to nomination and claim settlement process that has been effectively from November 1, 2025 nomination facility and September 26, 2025 settlement of claims to enhance what customer convenience and simplify the inheritance process. First point is nomination facility effective from November 1, 2025 under the RBI nomination facility in deposit accounts, safe deposit lockers, and the articles kept in the safe custody with banks. Direction 2025 issued around October 28, 2025. Mandatory of offer bank must explicitly offer the nomination facility for all deposit accounts, lockers as well, safe custody articles at the time of account opening or hiring. Now the multiple nomination customers can now nominate up to 4 individuals per account. ठीक है कितने individuals per account? It will be 4 individuals per account. ठीक है ठीक है either simultaneously percentage wise split or successively priority based. Now the third point is nomination register status. Banks are mandated to display nomination registered on the passbook statement of the account and term deposit receipt, that is TDR. Right? I hope the first 3 points is very much clear. Let's now have some more points. That the fourth point is record name of nominee. The name of the nominee must be recorded in the account records and printed the passbook and the TDR. Acknowledgement should be also given. Banks must provide a written electronic acknowledgement of the nomination registration, cancellation or variation within the 3 working days. Date is very much important. How many working days? 3 working days. So non-nomination rule is if a customer chooses not to register a nominee, they must submit a written declaration. If they refused to provide this, the bank must record the refusal in their system. It is very much important. So all the, I guess, 6 points I have discussed in this. All the 6 points is very much important in the nomination and claim settlement. Now the first I have discussed in the nomination claim settlement nomination facility that is being effective from 1st November 2025. Now in this only I will be discussing about settlement and of claims that is effective from September 26, 2025. What are the claims? What are the rules related to the claims? So under the RBI settlement and the claims in respect to decreased customer of the banks, Direction 2025, first a 15-day time period it has been given. 15-day time period means if a valid nomination exists, bank must settle within 15 calendar days of receiving the required documents. Second point is compensation for delays. If claims are not settled within the 15 days of window, banks are liable to pay compensation to the claimant. Deposit interest at a rate not less than the prevailing bank rate plus 4% of the annum for the period. ठीक है. Second point is locker safe custody. A penalty of rupees 5,000 per day of delay it should be given to everyone. Right? Now the third point is simplified procedure. Simplified procedure means where no nomination exists, bank must follow a simplified procedure, right? Up to 15 lakh in commercial banks, 5 lakhs in cooperative banks to settle claims based on legal hire certification without requiring onerous documents. Okay, it has been given. So data is only important. You should understand what is the bank rate plus minus formula they have. Lock-in period में क्या है? If there is a penalty, what is the penalty and penalty amount? That is 5,000 per day. You should remember. 20th key finding is global macroeconomic outlook. It is that year and global growth. So if you will see about it in year 2024, it is global 3.3%, 2025 3.2, and it is 3.1. You should understand it given by it. So EMDE growth, it is 4.2% in 2025 and 2026 it is 4%. Global inflation, if you will talk about, global inflation is year 2025 it is 4.2%, and 2026 it is 3.7%. And global trade, it is, if you will see year and trade, how much it is, wait, it is something related to 3.6 global trade, and 2026 2.3%. Global debt trends, 21 findings. It is advanced economies 111.8% of GDP 2026, and EMDEs that is 77.8% of GDP 2026. So fiscal stress is rising globally. So if you will think about fiscal stress, it is rising globally. And who predicted that? RBI predicted that. Okay. Now, global banking landscape, the data has been given. So you should understand that China dominates global banking. Chinese bank lead top 100 banks by tier 1 capital, reflects China's growing financial influence. Okay. You should understand with this graph, right? So now the 23rd key findings is major global risk is AI driven market corrections, geopolitical conflicts, trade wars. You can easily write it down. Supply chain disruptions, rising fiscal deficits, everything is that. So overall assessment of this report is what the RBI has given. The report conducts Indian banking system is strong and resilient. Talk about the Indian banking system, it is strong and resilient. Okay. Key strengthen, it has a lowest NPA indicates high capital buffers, strong profitability, expanding digital payment ecosystem, rising what? Financial inclusion. What is the key challenges? Digital fraud, climate risk, technology disruption, global economic uncertainty. So these are the things that you should keep in the mind. So this report is big. I already told you while starting the class 365 pages की reports हैं, बहुत data oriented reports हैं. Just you need to find the key findings and उसमें आप उसकी data को एक एक चीज करके समझते रहो, right? So what is the MCQ that I have been talking about? The first MCQ over here is, which of the following best explain the policy rationale behind the transition from the incurred loss model to the expected credit loss ECL framework in the Indian banking system? The first question is in front of your screen. Tell me. So I'm directly telling you the answer. It is ECL से related है. The third will be to enable earlier recognition of potential credit stress and improve forward forecasting risk management. So it should be the answer for this question, right? So ECL framework आप पढ़ना and you through this MCQ also your report, this report can be covered that I am giving. ठीक है? But read once, ठीक है? Read once 2x में सुन लेना, it will be easy. Second question is the liquidity coverage ratio, that is LCR revision effectively April 2026 introduces an additional run off factor on certain deposits. What is the primary regulatory objective behind this change? So what can it be? It will be C, to address potential liquidity risk arising from rapid digital withdrawals. Okay? So digital banking allows instant withdrawals, increasing liquidity risk during stress. Okay? The additional runoff factors improves liquidity buffers. So I hope this second question is also being very much clear to everyone. Now the third point is, under the RBI investment regulations for alternative investment funds, that is AIFs, a regulated entity must make 100% provision under which of the following conditions? That is under C, when regulator entity invest more than 5% of the AIFs corpus, then it leads to any that lends to its own borrower. So you should understand it. It is something which is indirect exposure on loan evergreening through AIF. So that is the third point. C is the correct option for this third question. So the fourth question is, the RBI reduced the qualifying asset requirement from NBFC Microfinance from 75% to 60%. What is the most appropriate policy objective behind this decision? What can you see about it? Very good. Very good. So B is the correct option for this question. That is portfolio diversification, right? Portfolio diversification is the correct option for this question. So I hope that terms are very much clear to everyone. Okay. Is it clear? To B option is clear to everyone. Now the fifth question. The fifth question is telling about which of the following best reflects the regulatory concern addressed by the RBI reforms in co-lending arrangement CLA. So it is also B. Regulatory arbitrage through originate to distribute lending models. This is the correct option for this question, right? I'm not making it because I have already discussed these things. Risk sharing, retention norms, and transfer timelines is the key findings. Sixth question. The Financial Inclusion Index, that is FI index published by RBI, captures inclusion using which of the following dimensions? Which of the following dimensions? Tell me. It is access, uses, quality, and profitable of banks. It is 1, 2, 3. First three not profitability of banks. The Financial Inclusion Index published by RBI captures inclusion using which of the following dimension? Access, uses, quality. Okay. B option is correct for this question. 1, 2, 3 and 3 only. Okay. You should understand. Access 35%, uses 45%, and quality 20%. This is very important question. Okay. Now, seventh question. Which of the following statement best explains why public sector banks cannot uh, account for a larger share of fraud amount despite private banks reporting more fraud cases? What is the reason behind it? Because public sector banks have larger loan portfolios and higher exposure to advances related frauds. So B will be the correct option for this question. Okay, so I hope the seventh question is also very much clear to everyone. Now the eighth question. Which of the following best explains why NBFCs are considered systematically important in the Indian financial system? Right? So it will be C. They provide credit to undeserved sectors such as MSMEs to retail management. So C will be the correct option. Ninth question. Which of the following risks are associated with the increasing use of artificial intelligence in banking? So what will be the reason behind it? What will be the reason behind it? So it will be B, that is 1, 2 and 1, 2, 3, 1, 2 and 3 only. Okay? All risks include bias, privacy concerns, and model risk will be included in it. So ninth question is also very much clear. 10th question. 10th question is telling about the climate change is considered a financial stability risk primarily because it can affect banks through which of the following channels? Obviously, it is 1, 2, and 4. Physical risk from extreme weather events, it is correct. Transition risk from environmental policy changes, it is correct. Technological risk from AI adoption, it is not something related to it. Financial stability risk. And fourth is credit risk for carbon intensive industry. Yes, it is. So B will be the correct option for this question. 1, 2, and 4 only. Okay, third will be incorrect. Okay, I hope the question is clear to everyone. 11th question. According to the report and trend and progress of the banking in India 2024 and 2025, what was the gross non-performing asset GNPA ratio of scheduled commercial banks in March 2025, marking a multi-decadal low? It is 2.2%. Okay, so 2.2% is the correct option for this question. Right now, we will have some more questions. Wait for 5 minutes more. So it is what was the capital to risk weighted asset ratio CRAR of scheduled commercial banks reportedly in the RBI trend and progress of banking report 2024-2025? It is 17.4%. That is D. It is very much easy to answer. 13th question. 13th question is telling about the total value of banking frauds reportedly in India during the year 2024 and 2025 was approximately, it is 34,771. C is the correct option. Right? Okay, 13 is also, it is easy question to answer. Is it clear? Now 14th question. What was the credit growth recorded by NBFC in 2024-2025 according to the RBI report? It is D, 19.4%. Okay, credit growth was 19.4% according to NBFC. Okay, समझ में आया? Credit growth. Now 15th question and the last question for today classes. According to the report, what was the value of the RBI Financial Inclusion FI Index in March 2025? It was 67. ठीक है, 2017 में कितना 43.4 and it is 67. 67D is the correct option for this question. So this is a very big report, right? I hope I have taken 1 hour 30 minutes approx class for this report. Why? Because this report you have to read it twice, just before and also before the examination, right? So I have also covered the various MCQs that can be covered from this report, and I have tried to cover this report with one of the mnemonic, that is bright fintech. You should remember all the points that are important for this terminologies which are important in this report is covered through bright. I know some of the points I was reading, but because you are having no idea for it, right? But if you will read it twice and thrice, just mug it, revise it 2x with again and again, and see the MCQ and again. By this method, you will in the examination halls, somehow it will be fitted in your subconscious mind and it will be reflecting in the form of MCQ in the examination hall. So thank you so much. Keep learning. Bye. Take care.